Here's an awesome scalping strategy that you can use on every time frame. I'm going to show you this on the 1 minute chart. We're looking at USD, JPY, Forex. So we have a Japanese yen US dollar chart. And what I have is just 1 minute regular candles. And you can do this completely free on TradingView. You only need two indicators. The volume indicator, which we're only using just so that we know that we're trading the right time of the day here. So you don't actually even really need to use the volume indicator. So you can actually do this with one. I'm just putting it on there because it helps me when I zoom out just to make sure that I'm looking at the time frames when the most volume is in the market. And we're going to change the EMA to a 21. And I like to make it brighter. So I'm going to go with white and just a little bit thicker. Okay. And all we're doing here is using this special drawing tool, which is not really special. It's just a rectangle. And what we're going to identify is whenever the price starts to range, we're going to identify the range and we're going to trade the failed breakouts. So the way that we identify this is when the EMA is very angled like this, we're typically trending and we're not really in a range. But once price starts to swing on both sides of the EMA and the EMA starts to not really be consistently going in one direction, then we know we're ranging. And so that's what we're going to look for. So after this move here, when this starts to go up, and then it breaks really sharply below, and then it starts to go sideways, this is what we're talking about. So what we're going to do is we're going to identify the low of the range, and we're going to draw our rectangle around basically that big candle around the bottom. And we're going to identify this as a large sort of range low area. It's pretty much all within this candle. And then we're going to identify a range high up here. So you can see this green candle is kind of an interesting range high zone. It broke down there, so it's kind of hard to say for sure. But we're just going to identify that as a possible range high. And we're just looking at, is there going to be any trades in between here? And what we're trying to find here is when the price is bouncing off the lows of the range, if we get a failed breakout attempt. Because realistically, on a range like this, there's lows here. And anything that's breaking below those, like this candle or these, are failing to break out of the range. So they're either bouncing off the lows of the range or they're trying to break out and failing. So what we're doing here is we watch the price come down, and we're going to use a parallel channel because we're not going to take a long trade while it's within a channel. We're going to wait till it breaks out and price action plays out, and then we're going to see if we get one. So as it comes through here, you can see one starting. So we start to get this channel here that then overshoots at the low side, and you get this nice bullish candle. Now off of the low of the range there, when you get a bullish candle like that, and you have a 1, 2, 3 triple test, you can go long. What we're going to do is wait for that candle to close. We're going to enter one tick above the candle. Stop loss is going to go right there. Usually I day trade the ES on tick charts. So you'll hear me say ticks a lot instead of pips and all that. So anyway, just calling that out. And I accidentally chose short position. I meant to choose long position there. So let me switch that. So long position, one tick above, one tick below. And so you can see what we're doing here. We're not trying to get huge trades. We're just going for a 1-to-1 on the scalps here. And what we're going to do is we'll go for the 1-to-1. And then after we hit our 1-to-1, you can take off most of the position, move your stop to break even, and try to catch a runner. And you can take that one up as far as you want to. You can trail your stop as you go, trail it, trailing below, maybe like a few pips below or so, like each one of these candles. And then eventually, it trails to there. So you can get a pretty large trade that way. All right, so then as it comes down, same thing. We're going to see, we don't want to take the trade while it's still within the trend. So we want to see here, even though this is a bullish candle at the bottom, we're not ready to enter yet because it's still within this downtrend, and this could be a downtrend that continues. So you have to wait. Now, after it closes outside and then it comes down and makes a new low right here, the downtrend is played out. And now we're really looking like we're going to get a failed breakout here. So again, downtrend is played out. We already got our new low. We got a really bullish candle. We go for a 1-to-1 right there. That fills. Stop loss then moves to break even. And we get a runner. And I mean, if you stayed in this runner, you could have rode this thing up way up. You know, that thing just kept going. So then, as it comes up to the high side, we don't get any sort of real failed breakout attempt here, because when this, you can just see this with your eyes, but you can also draw it. The way that there's a wider trend channel in play here. And even if you did draw a tighter channel off of here, there's just no way to enter a trade there. As you can see, like you can't go short right there. You're still within the channel. So you wait for it to break out and you see what we get. It breaks out, but it still continues higher. So we're at this point, we have to start to evaluate, do we have a different range? And we possibly do. So up here, we start to see that we have this new high established over here. And so we are looking like we're establishing some new highs up here, and the range has moved, and that will happen. So you have to understand, like, there was an uptrend and now we're getting a new range. So you can start to redraw your levels here. All right, you got to find your lows. Looks like this candle gives us a pretty decent spot. So you kind of have a new range establishing. I just drew it off of there and there. And so what you get here is you get this move up. It reverses, but that's just kind of a double top bar. Like there's kind of an inside bar. So you got to wait. Now when it pushes up and you get this bearish looking bar, and then you get this bar next to it that engulfs it and is really bearish, that is a solid failed breakout type bar. The uptrend is already played out at that point because I didn't draw it, but there's an uptrend, a slight uptrend here that gets a close outside and a move to new high. So what we're going to do is we're going to take a short right there. Stop goes there. We go for our 1-to-1. Where am I at? There we are. 1-to-1 fills here. And then stop moves to break even. And you could ride this thing all the way down. And probably exit somewhere down here at the lows of the range is probably your best bet on something like that. All right. And then we come down. We do get a really bullish candle here. So that's a possibility because that does look like a really solid rejection. So you could definitely consider that to be a possibility. After another failed breakout attempt, same low as that low. And again, you know, 1-to-1. This one you probably don't get a runner really, but you do get a 1-to-1 pretty easily. All right. Here I wouldn't take any trades because it's kind of, at this point it's suspect. Like you're thinking, hey, it hasn't really gone that high there. So I would wait. And then it comes down and you do get this really, you get a bullish candle here, but the problem is it's inside bar on the red candle. So I would wait. It comes up, fails down again. So now you got this sort of double bottom working. And then you get this basically higher low. It's not the most bullish bar. It's still red, but it's somewhat bullish if it breaks above that. So this is what I would call a riskier one. If it's not a perfect setup, but I'm going to mark it and just to show you because it's pretty low risk. And you do have plenty of space to the highs of the range and it would have worked. So I just wanted to mark it. Usually you want the bar to be a little bit more bullish if you're going to take that, to be fair. So I just wanted to call that out. And then that's pretty much it. This is the end of that session, so I can't really show too much more there. But I just wanted to show that there's trades to be had within the ranges after some of the big moves. So if you miss one of these big moves, there are some solid opportunities afterwards as price consolidates and starts to form ranges. So don't sleep on range trading. Range trading can be some of the best. I mean, for me, it's simple. If the price is bouncing off the same levels over and over again and rejecting the same levels over and over again, there's longs and shorts to be had, and you can take those all day. These price action strategies work on every time frame. Now, again, I trade the ES on tick charts, but I just want to show that you can use these same strategies that I use on the ES day trading on tick charts on every single time frame because the price action is universal. So I will see you in the next one.